If you look at the gold ETFs, right, the gold bullion ETFs, which many people compare the Bitcoin ETFs to, they launched in the US in 2004. And they were really successful. Their first year, they had $1.5 billion in flows, and everyone thought this is amazing. But the second year, they had 3.3 billion in flows, and then 4.6 billion, and then 5 billion, and then it peaked at something like $19 billion in year 7. And I think that'll happen in Bitcoin too. We came out of the gate really fast, and we'll be well north of $20 billion this year, maybe 30. I think next year will be even bigger. So yeah, I think we'll get to $100 billion by the end of 2025. I mean, we might exceed that, given what I'm seeing in the market.
Matt Hougan is a prominent personality in the cryptocurrency industry and the Chief Investment Officer for Bitwise Asset Management, the world's largest provider of cryptocurrency index funds, with over $1.5 billion in assets under management. As a world-leading expert on ETFs and financial technology, Hougan has a special appreciation for cryptocurrency-based spot ETFs and their impact on the development of the cryptocurrency industry in the US and globally. Despite recent price movements and a slight tapering of the demand for the approved US spot Bitcoin ETFs, Hougan is still quite bullish on the ETFs and the ongoing crypto bull market. In one of his recent tweets, Hougan predicts that the US spot Bitcoin ETPs, which have attracted $56 billion in AUM, will reach at least $100 billion by the end of 2025 as they mature and are fully approved on platforms like Morgan Stanley and UBS. In a recent interview with Crypto Nutshell, Hougan restates this prediction, adding that $100 billion will be pretty conservative, considering how far the ETFs have come in 6 short months. Hougan also talks about the current state of the crypto markets and certain tailwinds to look forward to, in his words, which could drive Bitcoin to $100,000 by year-end. According to the Bitwise CIO, the crypto market is currently facing a weird dynamic. All the short-term news is bad, and all the long-term news is good. Some of the mid to long-term tailwinds Hougan is positive about include the extraordinary inflows into the spot Bitcoin ETFs, a notable difference in the attitude of US politicians and regulators towards the cryptocurrency industry, and an imminent rate cut announcement from the Federal Reserve. Hougan is certain that after the effects of short-term headwinds like the Mt. Gox distributions, Silk Road sales, and German government sales wear off, the tailwinds will begin to come into play, and prices will quickly take off. Hougan predicts that Bitcoin will hit at least $250,000 in 2025. In his words, 2024 H2 will be bigger than H1, and 2025 will be bigger than 2024, as tens of billions of dollars will pour into Bitcoin, Ethereum, and the rest of the cryptocurrency market. We will now bring you clips from Matt Hougan's interview with Crypto Nutshell. Please share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Without further ado, let's dive right in.
I'm licking my lips at the opportunity. That's my take on the current market. I see this as an enormous gift to long-term investors. I think you framed it exactly right. We have all these short-term liquidity-driven negatives. We have the Mt. Gox distribution. We have the German government with $3 billion of Bitcoin. We have the US government with $12 billion of Bitcoin, all moving to dump it on the market, which is driving the price down, and in classic crypto fashion, occurring on a low liquidity week, and therefore, blowing out futures positions, leading to cascading liquidations, and so on and so forth. But all of these things are short-term, non-recurring events, right? Mt. Gox is always going to send out its Bitcoin once. The Silk Road Bitcoin is only going to be sold by the US government once. Against these short-term, non-recurring events, we have these long-term massive catalysts. We have the ETFs, which are going to vacuum up assets for the next decade. We have institutions starting to embrace Bitcoin. We have Washington changing its tune from caustically anti-crypto to at least neutral and potentially very pro-crypto. I think as soon as we work through these negatives short-term, we're going to have a historical bull market run. And I'm really excited for the second half of the year. We just have to suffer through this little period because that's the way crypto works. But these will pass, and the long-term trends are very intact. I thought they were going to be a huge success, but to say that I expected $15 billion in net inflows in 6 months, even I wasn't that optimistic. Perhaps because I come from an ETF background. I was the CEO of ETF.com. I spent 15 years in that industry. I know the history of ETFs. I knew that the most successful ETF launch of all time pulled in $5 billion in its first year on the market. And I thought Bitcoin ETFs could do better than that. So I was feeling optimistic that they would be the most successful ever, but I didn't know they would 3x it in 6 months. That's absolutely incredible. And it's even more incredible when you consider that there was a fair amount of assets in GBTC, the Grayscale Bitcoin Trust, which were just there to arbitrage the discount there. And those came out as well. And those don't count in that $15 billion figure. We overcame that short-term headwind, and then we added $15 billion on top. And yeah, I was optimistic, but I wasn't quite that optimistic.
Is the main cohort that is buying these Bitcoin ETFs, is it actually retail driven, or is it the institutional and sophisticated investors?
Yeah, there are three really big groups right now. So there's retail investors is certainly a big part of the market. There are hedge funds who are usually engaging in trading strategies. And then there are long-term, professional, sophisticated institutional investors, which might be family offices or financial advisors or institutions. I would say in the first days, maybe in the first months, those first two groups were the biggest people. They moved the fastest. Hedge funds can just decide to invest and they invest tomorrow. Retail investors can decide to invest and they'll invest tomorrow. The long-term professional investors, they take longer. They do a due diligence process. They compare competing products. They talk to their clients, and there's a process. So it's a long-winded way of saying out of the gate, I think retail and hedge funds were the biggest drivers, and that's a little bit what you see in the data. But over the last few months, we've seen a significant acceleration in this other group of long-term buy and hold institutional investors as they complete their due diligence process. And I think going forward, that's going to be the biggest group. The reason I think we'll see, more inflows next year than we see this year is because that group just gains momentum and grows and grows and grows.
At the moment, many would argue that the demand for US spot Bitcoin ETFs, which continue to record consecutive days of net inflows, is not having any real effect on prices. However, in a memo sent to investors earlier this week, Hougan argues that the short-term headwinds are solely responsible for the current situation and that things should improve as soon as they end. He wrote, $8 billion from Mt. Gox, $12 billion from Silk Road, $2 billion from Germany. That's a lot of Bitcoin. Making matters worse, these sales and distributions began in earnest over the July 4th holiday week, which is typically a low liquidity time for crypto. This amplified the impact and led to large liquidations in the futures market, further pressuring prices. Regardless of these obstacles, Hougan is optimistic because they are all short-term events that should pass quickly, and their effects will no longer be felt. On the other hand, the tailwinds are long-term and will continue well into the future. In his memo, Hougan added, Mt. Gox will distribute its Bitcoin, and that's it. The US government will sell its Silk Road assets, and then they're done. Meanwhile, the positives are ongoing. The Bitcoin ETPs aren't going anywhere. Ethereum continues to attract new interest. Washington's embrace of crypto appears to be accelerating, and so on. That's why the recent pullback is a gift. Right now, one-off events are suppressing what I think would otherwise be a raging bull market. Once the market digests these short-term liquidity shocks, the future looks bright indeed. Here are more clips from Hougan's discussion with Crypto Nutshell.
It's actually the opposite. They're really slow out of the gate. So it's really hard to get an ETF to be $10 million, to be $100 million. The vast majority of ETFs end their first year with less than $50 million in assets. Small ETFs are challenging for institutions to buy because they're not liquid and they're not well established. So to give you an analogy, if you look at the gold ETFs, right, the gold bullion ETFs, which many people compare the Bitcoin ETFs to, they launched in the US in 2004. And they were really successful. Their first year, they had $1.5 billion in flows, and everyone thought this is amazing. But the second year, they had 3.3 billion in flows, and then 4.6 billion, and then 5 billion, and then it peaked at something like $19 billion in year 7. And that's what you really see with most ETFs is it grows year over year over year for like half a decade or a decade before it hits some sort of plateau. They're a slow moving train that accelerates. And I think that'll happen in Bitcoin too. We came out of the gate really fast, and we'll be well north of $20 billion this year, maybe 30. I think next year will be even bigger. I think it's going to be the same sort of building staircase in Bitcoin that we've seen in all other ETFs. Many people think of Bitcoin as digital gold or emerging store of value. It's also the case that when gold ETFs launched, they weren't a mainstream asset, and ETFs helped bring them into the mainstream, just like Bitcoin hasn't been a mainstream asset and ETFs are bringing them into the mainstream. So I think it's a reasonable comparison. And, we can talk about why the Bitcoin ETFs have grown so much quicker. I think it has to do with we waited 10 years for them, right? It took a long time to get them. And also the fact that Bitcoin, look, it's just objectively the best performing asset in the world over the last 3, 5, 10, years. So obviously investors are going to want to allocate to it. I don't find it surprising, but the scale of the success is still pretty massive. The inflow figure, we actually sort of covered it, which is just my history with ETFs, not just gold, but 15 years of operating in that space and building the first data system in that space is just this staircase approach that you see. And so we looked at, the early flows in these Bitcoin ETFs, and if you extrapolate outwards, it's pretty easy to get to that kind of number. And maybe even easier than it looks because these ETFs are so great. Our ETF only charges 20 basis points, which is half the price of the largest gold ETF. It's an incredible deal. And other providers are in that zone as well. So these are great products. So I think it's easy to get to that number. The how that translates into price, there's sort of an art and a science to it, maybe more art than science. I think if you look at the price returns of Bitcoin and how it trades over time, what you see is, at least how it trades since the ETF launch, you see, net ETF flows gobbling up more than 100% of all the Bitcoin mined. So the ETFs have to buy Bitcoin from people who already want to sell. And you can look at, sort of how old the coins are and where people have been comfortable selling historically. And I think it's pretty clear we're going to blow past all-time highs and blow past, the $100,000 level, which are the two behavioral cliffs that are up next, at which point people may sell. And then it's hard for me to imagine Bitcoin stopping until it gets to this $250,000 level before there's another behavioral wall. I'd also note that, like, if you ascribe to the 4-year cycle history of Bitcoin, it's a pretty reasonable proxy to assume you get to something like 3 or 4x the past year's price. And I don't know, you have to sort of assume that the past is not, or the future is not going to look anything like the past to assume we won't get to these levels. So we can see it to get to 250K. It could get higher, it could get a little lower. As an investor, I wouldn't pick one particular number, but you have to do that as a pundit. That seems like a reasonable level. And I think we'll get there.
Hougan has made several fun and exciting predictions for Bitcoin and Bitcoin ETFs. His analogy about the performance of the gold ETFs in the years following the launch of the first gold ETF is particularly noteworthy because of the parallels. Like gold in 2004, Bitcoin ETFs are just gaining mainstream acceptance and have performed so brilliantly in 6 short months, with only 2.6% of advisors recommending cryptocurrency-related investments to their clients. While this figure is way better than it was about a year ago, we still have a long way to go. That means more money and demand for the ETFs and the overall cryptocurrency market. Please share your thoughts on Matt Hougan's predictions for Bitcoin and spot Bitcoin ETFs, as well as your own predictions for the leading cryptocurrency, in the comments section below. If you liked this video, don't forget to give it a thumbs up, subscribe to the channel, and check out our other videos featuring important insights and analysis from some of the industry's brightest minds. We also urge you to check out our free newsletter, where we share free market analysis and lots of important market trends you do not wish to miss. Thanks for the support, and see you in the next one.